Hi guys, I'm back. The cake's gone. It went the way of the world. I'll learn it for upstaging me on the ratings front. Right, today I want to talk about the stock market. I am very, very concerned that the stock market is going to tank back to the levels it was last week. The reason for that is last week we thought we had an idea of how bad things were. The central banks came in and intervened. They cut interest rates down to zero or whatever, pumped in loads of money, and the market bounced a little bit. And subsequent to that, we've learnt a few more things, and now we kind of need to reevaluate what's going on. What we've learned is that yes, coronavirus is deadly serious. Yes, it is not going to be over in a couple of days, couple of weeks, over by Easter. It is a situation that potentially could be with us for quite a while. Now, I don't think the markets particularly have priced that in. I think what they've said is, yeah, it's bad. Oh shit! What? Well, at least the central banks have come in and intervened, and that will stop things. But I think what we're in is a situation now that, if you look at the outbreak, the danger of anything really seriously bringing this to an end any day soon is nil. So we could be looking at isolation, say, for 3 to 4 months, as in the Chinese model, and then a gradual let off. And you're noticing, I think Fauci said this yesterday, Dr. Anthony Fauci. He was talking about this could be a year, this could be whatever, and this is a growing thing that even in China, where they're starting to relax some of the restrictions, it's going to be a year notionally before things can get back to normal. Now that isn't in people's psyche. People aren't thinking these companies will be shut down for a year. They're just, people haven't even thought that yet, which says to me that stock market is here. It had been down here. Central banks intervened. We found out a little bit about the honest or slightly more honest nature of the coronavirus, and that's the extent of how far it can go up the way, given that we know that the coronavirus is a problem and the central banks have intervened and there is nothing left they can do, because they've kind of just poured money in and said, well, that's it, and it really hasn't had much of an effect. So every piece of bad news is going to look down the way, but more importantly, there is no upside at the moment. You can't go in and go, well, I'm going to buy this because I think the coronavirus thing is, yeah, they're all making it up. It's going to be over and done with. This is game over. So when you can't buy it, it just leaves the door open for more downside stuff, and I think that's where we're going to go, because we're just going to see more bad figures, and even if we see good figures, they're not good. So the temptation is it goes down the way. Now, where this is important is for people even who haven't got shares. This is important because what we are in danger of watching here is what I said might happen, where we create a asset slump and a credit crisis all at the same time. So the assets, your things of value, like your house. How many of you in the UK think your house is worth more this week than it was last week? How many of you people who thought, oh, I'm going to sell me little investment speculative housing thing for $1.5 million this week, that would be quite happy to sell it for $1 million if they genuinely could find a real buyer? So those are assets. Houses are assets. How many of you are in a business where you had a factory and it's no longer of any use to you because you can't get the workers in? So that asset's worthless. Once you start to think like that and the stock market starts to go down, then we get into a spiral where we get an asset slump, and that ties in at a time where you get a credit crunch, i.e. you can't borrow any money because all the banks are doing is consolidating their own balance sheet. Remember what happened last week with the government are going, they're going to guarantee however many £1 trillion worth of bonds, and the loans, and the banks are going to go and lend money. Well, as we've seen over here, exactly what I said, the banks ain't lending nothing. Even with an 80% guarantee from the government, the banks have put their interest rates up from 6 to 8% to 25%, and then they want your house as well. So that's a case of you can't get money. Assets are being sold, so the only way to get money is to sell assets. Then you're into an asset slump, and then everyone's calling in the money because everyone's going to lose. So what needs to happen is, as I said before, we need to shut the stock market down, abandon the notion of charging interest rates and charging rent in the period of this emergency. That's all very simple stuff to do. If you don't, what will happen is, once the stock market starts to slide again, this is going to be like trying to catch a piano. You know, you can stand underneath it and go, oh, I've got it, but whether they kick a piano out of the 5th floor or the 10th floor or the 1st floor, if you're underneath it and catch it, you ain't going to survive. And that's what's going to happen. Assets are going to slump. So the only way to stop them slumping is to realise that this is a state of emergency. These requirements are what they call force majeure. The government are already in the marketplace. They need to get into the market. They're already in your business. They need to get into the business of money. They're already into the economy, trying to patch it up, but they need to work out how the economy works and understand what things are dangerous to leave operating. And leaving the stock market open is dangerous. Allowing people to charge rent is dangerous. Allowing people to charge interest and foreclose on loans is dangerous, because this could be an unforeseen thing. This could be 6 months. I've said a year. What if it's 2 years? It's even unthinkable at a year. You know, there's an old story. I remember old Mrs. Jeffries told me this about losing her house once. We got kicked out because we couldn't afford a week's rent, and I thought, that's appalling. And she was absolutely right, because the adage is true. If you can't afford a week's rent, you can't afford 2. So what we're in is a situation where if we don't close the markets, assets will slump, and then everyone needs to call in, and then you start going, oh shit, I better get my money out of the bank. And that's what happens. It's how it happens. It's how it's happened before. Government comes in, shuts the stock market, says for the period of this emergency, no rent is to be charged on anything. Rent on properties, rent on businesses, rent on flats, rent on money. No rent. It's an emergency. If you have it and you want to rent it out, guys, it's a two-way contract. The people who are using it aren't getting the benefit of it. You shouldn't be protected. You're just not getting any rent. End of story. That way the government doesn't need to borrow money to pay that rent for people. Just go in and say it's a state of emergency, guys. For the period of the emergency, you can't charge rent. If that period's... This would have been easy done if you did it like 2 weeks ago, because you could have said, we're just going to do it for 3 or 4 weeks. Everyone would have believed it's 3 or 4 weeks. You could now say we're going to go and do it for 2 or 3 months. Everyone would believe it's 2 or 3 months. What if it's a year and a half? Okay? Think about those things. Think about those spirals. So we need to get this piece of stuff enacted now. Otherwise, what happens is, a year down the line, what companies are left? Who's left a year down the line? You know, your universities, they're all private companies now. They'll all be out. They'll all be gone. Loads of your support businesses will be gone, because people just can't get out and do things. And even if you really relax things up and, you know, free things up or whatever, if people can't get around and make stuff, then they can't get around and sell stuff, and they can't get out and buy it. So that needs to happen. Abandon rent, shut the stock markets, shut the commodity markets. You don't need some smart ass sitting there with all the goods that are hard to produce 3 months down the line, and you're going, oh God, I wish I could get some of those, and someone's going, well, you'll have to pay for them. That's free market forces. There is no such thing as free market forces. There are no free markets in the world. Anyone wants to write in and prove one to me, feel free. Anyone who wants to think, oh, I'm a smart ass and I know what the fuck I'm talking about, show me one free market in the world. Show me one rule of free market economics. There aren't any rules. They're all things that we make up at the time as suits us best. Now, we need to do some stuff here and do it rapidly. And I'm hoping to God someone up there wakes up to this. Things I think of, I'm going to leave you on this. Start trying to think about things ahead of time. Right, think about November when we got US elections coming up. Is there going to be a US election? Just think about that. How the hell are you going to run it? You know, how do you campaign when you can't criticise the government because you're in a state of national emergency? Those are sort of areas to look at and think of. Think of what happens over here if we lose 2 or 3 members of our cabinet who die. What happens if Boris dies? What happens if Dominic Cummings, who I've been writing to every day for about a month now, what happens if Dominic dies? What happens if you start to see these situations as what they are? It's quite feasible that these things could happen. How do we get ourselves out of it? The way to do it is to get on the front foot. Mayor Cuomo in New York, brilliant speech he gave yesterday, really about the need to understand that the nature of the problem, understand that you haven't reacted as well as you could and you've been taken by surprise, but the need to get onto the front foot, the need to get ahead of what's being done, the need to plan and not react, the need to see what is potentially going to happen and act before it happens. Don't allow a viral contagion to become a financial contagion. And what the banks have done, central banks, is not enough to contain this. They need to look outside of this and think much more logically about what potentially could happen. What is the worst that could happen if they intervene and said, right, we're going to shut these things down for a while? The worst could happen. Those people who are currently going to get rich out of all this disaster won't get quite as rich. Those of us who are in peril by this kind of disaster won't be in as much peril. Now that says to me quite simple human maths there. In you get, do the right thing. Do the right thing. I remember being told that once by a massive hedge fund manager, and I thought it was such a beautiful compliment. Trust people to do the right thing. Know where your conscience is. Know what is the right thing, and be brave enough to do it. Do the right thing. I'm off now. And if you want to know where that cake went that upstaged me, that's for me to know and you to find out. Bye, pig fans.